I'm Corbett Wall with DV Auction, here with your 3-minute cattle market update for Wednesday, March the 29th. And all we can really say is to hold your ground, boys, you guys that are going to sell negotiated fat cattle this week. The only way that this market's going to get lower is if you guys start taking less for your cattle. You've held it this long, right in the face of that huge basis that's the big disparity between the cash market and what our live cattle futures are. But just continue to hold your ground. They need your cattle worse than you need to sell them. Everybody's real current right now, especially in the northern plains where they're starting to pull green cattle, and we've still got probably close to a month before we're going to run into any significant numbers there. And if we continue to dig and pull those cattle forward, we won't ever have a problem, and we can get through the heart of the summer in a lot better shape than everybody had predicted. But you look at the board, your live cattle futures on the June contract, that's where all your open interest is, and that's where all your volume is. So we'll look at the June. Monday was down $1.40. Tuesday was up 15 cents to end the day on Tuesday at 111.60. That's on your June. That's roughly $20 back of what your weighted average for last week's fat cattle trade it was, let alone the top. Your April was down also, and ended the day on Tuesday at 120.77, and that is roughly $10 back of what your cash market is. And we're going to be into April this week. It doesn't actually have to come together until it matures at the end of the month, but you know, that's saying a lot that we're going to lose more than $10 here in just 3.5 weeks or something. And as long as they don't give up too much ground, it's not going to happen. Just demand you know, $1.30. Say you won't take any less than that, and don't call until you get it, and everybody will be all right. They just got to get their heads together. Feeder cattle futures, let's talk about the May. That's where all the play is. The April's really dwindling down on the amount of activity that's going on in it. Look at your May board for feeder cattle. Monday was down 247. Tuesday was up 27 to end the day on Tuesday at 131.60. That's now several dollars back of what our real-time index and our CME index is, but it had been running to a premium of what the cash market is. But we've seen these markets move up quite a bit here in the last 10 days or so, and the board falling off big on Monday. And we wonder why the board was down so much on Monday. It didn't have anything to do with the cattle on feed report. That was absolutely neutral. The analysts pegged it exactly on what it was, and there was no big news in there at all, and there sure wasn't anything that would cause it to be bearish. Some people are saying there was some other things going on there. There's a lot of bearish technical indicators in the futures market, and if you listen to me very often, you know what I think of technical indicators, where you know, the board just tracks itself and feeds off of itself, and really pays no attention to the fundamentals or the cash market. And I think that's really a poor way to look at it, but you get enough of those guys believing in it, and it's going to work because they can make it go which way they want it to go. But there was some talk that after Brazil had so much problems with their inspection and the quality of their products and the payoffs and this and that, and just a big mess down there in Brazil, which they're the biggest export customer. We're sure not. But some of the countries that were their biggest customers, including China, have resumed trade with them again. And it's not like we were going to get a whole lot of China's trade, but we thought it might get spread out around and would trickle down and end up helping us some, which it's bound to help us a little bit. But that was a little disappointing to some people, and a reason that maybe the board was down pretty big on Monday. Let's look at the weighted average on last week's fat cattle trade on 94,900 head in your 5-area feeding region. Markets were good, like we've already talked. Your live steer weighted average price was $130.91, which was up $2.27 compared to the week before. Dress steers had a weighted average of $210.99, so right at $211 there, up $3.05 from the previous week. Box beef cutout values have been fading, and that's kind of seasonal. We're used to seeing that. a little spike at the very beginning of springtime and then leveling off, and then we'll see it come back again here as we get into April, and some of your big grilling holidays start to come up, like Memorial Day and Father's Day and things like that, and then we'll recover some more. Slaughters clicking right along so far this week. Just 1,000 less than last week and 21,000 more than the same week a year ago. Your Fed Cattle Exchange, which has been kind of playing a big role in kicking off our negotiated trade, they've got less than 4,000 head on offer for Wednesday, which is not abnormal. That's about what they normally have. We'll see about 10 o'clock on Wednesday, whenever they have that. We'll see kind of what happens. But I wouldn't expect your packers to really tip their hand much anymore. With these box beef cutout values fading and as much rope as they've given here, excuse me, in the last couple 3 weeks, they're really going to balk at higher prices. They may end up giving steady, but they're going to balk at anything too much higher, especially when the board's sitting that far back, and not that they have any interest in that, but they probably won't really go beyond themselves on such a light offering of the online sales on Wednesday, and I wouldn't look for them to branch out right after that on Wednesday afternoon. Probably going to be a late Friday trade before somebody blinks on that, because your cattle feeders are getting a little bit arrogant in the trade, and they're getting kind of hard to trade with, which they've got the leverage. Your cattle feeders absolutely have the leverage. They don't have to sell cattle. Your packers need cattle. They want to keep their inventories up in case something breaks loose on the exports or something like that. They're still making money, even though box beef cutout values have been fading lately. But let's look at your feeder cattle markets. Oklahoma City at 6,100 head. You see how the runs are really backing down now. We will see that back off until you see another late wheat run of cattle. We'll see that, and then they'll really drop off big through the early summer months till we see some of those summer yearlings coming off grass. But 6,100 head in Oklahoma City. Feeders were $2 to $5 higher. They had a lot of catching up to do with those mid to late week sales last week. Calves were uneven, but on a light test, we're just not seeing a lot of calves. Not a lot of really desirable stocker cattle. If we saw any thin-fleshed, aged, lighter weight cattle, they would sell really well, but just not many of those left. They've already sopped all those up and are getting those ready to turn out. Joplin had 4,800 head. Their feeders were steady to 2 higher, as they were higher the week before and didn't have quite as much ground to make up on the later week sales. Calves were really uneven. They had heifer calves steady to 5 higher with more orders on them. Steer calves steady to 5 lower, but noted a lot of new crop fall-born calves in the mix there, as those are starting to come to town and just not nearly as desirable to turn out. They've still got a value, but they don't have that compensatory gain, that quick come on like those thinner, agier type cattle do. Look at some individual quotes on Tuesday there in Phillips, South Dakota, which you can see on DV Auction every Tuesday. They had a big string, 90 head of 608-pound steers at 145 on Tuesday, bring 165 and a quarter. A little bit later, they had some bigger yearlings. A load of them weighed 812 pounds at 136. That's 3 minutes. We'll talk to you on Friday.